Namaskar. Apologies for the slight delay in start. We had some technical difficulties and we had to work through that. Now, Sridhar Chityala joins us. A lot of breaking information. We want to try and help you see the clear picture amidst all this rabble rousing that is going on. Trump has also given a way out for many countries on how to get out of this tariff problem. And I think one lone holdout we are seeing again and again appears to be China, and perhaps it's what I would call cat's paws. So this is where we are today, but we're going to go through the details. What exactly is going on? The stock market is going up and down like this. Is this going to settle down or is it going to plunge? All this stuff and more. Let's welcome Sridhar Chityala ji. Namaskar and welcome to P Guru's channel, sir. How are you?
Namaskar. Good morning to you or good evening to you, wherever you are. Wonderful to be back, and there's lots of stuff going on, Sriji.
So, sir, I just want to set the stage here. Viewers, we just have two slides, okay? And just going to go through 5 or 6 points and then we will wrap this thing up. First thing is, China is a lone holdout in this. And take it away, sir. These are the bullet points that we came up with.
Yeah. Well, I think that China remains steadfast and it increased the tariffs on United States. So the tariffs actually kicked in from yesterday on Chinese goods coming into United States and probably vice versa. I think it's around 104% right now. And Scotty Bessent has basically stated that China was wrong and is wrong in trying to lift its tariff rates up against the United States. And it is playing on a losing hand. Well, that's his perspective. So markets that initially went up yesterday, trickled down by the time we reached end of day. And the treasuries moved past 4.25. Right now, it's around 4.3, 4.4%. And that is reflecting that the treasury rates are going to remain high because of looming inflation, which is what most of the economists are kind of predicting, including Jamie Dimon restating today in his interview that the tariffs are inflationary and may stall economic growth, and probably rather than interest rate cuts may see an interest rate hike. That's very much factored in. Remember, yesterday the rates went below 4%. Today the rates are up past the 4% mark. Across the world, the volatility is felt in the markets, not knowing the exact consequences that is going to flow in as a result of this impasse on the tariff agenda, most notably between the United States and China. Quite a few nations have come forward to negotiate the deal with President Trump, including Japan, Korea, Taiwan, Vietnam, EU, India, etc., saying that the only way out of this impasse is negotiation. Art Laffer, who's one of the Reagan economic advisors, and few others who are on the Republican side of the aisle, only few, stating that basically saying the tariffs are good because it will break the impasse on the so-called trade flows that are really not adhering to the WTO standards, and the tariffs will help to regain the momentum, at least on the United States side. This is some of the economists, but we'll cover the strategic aspects of it at the end of this kind of discussion as we move forward with these slides. The next set of slides, G.
That's all we have, sir. You just had 7 bullet points.
Okay.
I have a few questions. If we are done with this part, sir, on the oil prices, now they are at 57. Last time we talked about that 62 or something like that. Now we are at 57. Again, it could be one or the other crudes. Point I'm trying to make is that the world is seeing a drop in demand. Otherwise, the futures oil, we're always looking at futures price of oil, not today's price, always futures price, and it is seeing a drop in demand. Now let's keep that thing on one side. That is deflationary, isn't it? It's not inflationary. At least that way we can say oil prices dropping.
No, I think the oil prices dropping is a reflection of two important sentiments. One sentiment that is that there is economic contraction. We touched on this, right now as we speak. Global economic growth is expected to contract somewhere close to about 100 to 120 basis points, from 3% to less than 2%. And the US economic GDP is expected to contract by at least 70 basis points to 80 basis points, going from around 2.4, 2.5 to less than 2%. Obviously, when you have economic headwinds, one of the consequences of that is the energy prices, because there is going to be less consumption of that oil. So I won't use the word deflationary, but I use the word contraction in prices. So this is what the markets are factoring in. You need to sell what you have. You do not want to kind of keep piling up. So the futures contract is saying we have X amount of supply right now. So how do we kind of lock those at prices that are attractive for people to the potential importers to buy in? So that's the kind of rationale, the way we look at it, Sriji.
Thank you so much, Sridharji. Now, I want to go a little bit deeper into why some people are jumping up and down and why some people are like wringing their hands. One of the interesting parties here is the European Union. We know the EU doesn't have any teeth. It doesn't have any bite. I mean, no, it can't buy. It can only say that we support this. So they said we are for 0-0. But then EU also has been doing some other strange things. Sridharji, talk to us. How realistic is the EU stand on anything?
Well, I think there are three important aspects that surrounds EU's rhetoric. First and foremost, it doesn't want to stay quiet on the sidelines. It needs a position so that it can come to negotiating table to come to an agreement. So therefore, it's not that the EU tariffs are significantly high. They're around the 40% mark. So I think that they're saying, if you are going to impose, then we are going to impose taxes. So that is I think it's a negotiating position. Eventually, they would yield, which is a win-win situation between United States and EU. But the most important underlying point here is that United States is saying NATO is not free. You have to pay for it. And United States is very strong about it because it's an expense item on the INR or the balance sheet of the US government. So always pay for use has been Trump's policy. So this is the kind of the latent agenda which is sitting within the minds of because most of the EU economies are on deficits. They have debt and they have no ability to finance NATO. They have been having a free ride, if I have to use the word, in terms of US funding the NATO forces in EU. So they're saying there's no more free ride. I think the third which is already at play, is access to markets. Okay. This is one of the most important strategic agendas of President Trump. It's not about just simply tariffs on imports, but it is about access to markets. Many of the markets are protected. For example, agro is protected in EU. Japan, rice exports into Japan are protected. So many of the countries, while on one hand they talk about free trade, they have basically protected their markets from attempted access by United States into these markets. So he's really going after access to the markets to drive exports. So this is one kind of specific agenda that Trump has in his mind. And so to that extent, Sriji, a change has occurred over the last 24 hours. Now, Scotty Bessent and his deputy, the United States Treasury Secretary, is now negotiating. He has been tasked with next 3 months, April, May, June, to basically negotiate with these countries on both tariffs and access to markets, and which in turn will bring about the balance between exports and imports and reduce the trade deficit, which is very critical because everybody keeps blaming, US debt. But what's the kind of, the revenues that the United States can generate, and how do you kind of offset some of the debt that is on the balance sheet? So this is a new development that has happened. And this is the reason why, people are waiting. The United States has not jumped at 50 countries coming to its doorstep and saying, I want to negotiate, but they are trying to get a holistic picture from a negotiation point of view. And this announcement of Scotty Bessent is very interesting within the context of his cabinet.
Thank you so much, Sridharji. Now let's come to India specifically. First, it said that there will be no tariffs on pharma. Yesterday, Trump said that there could be tariffs on pharma. And again, I think it is tied with India's reluctance to accept agri imports. This is how I read it. I could be wrong, Sridharji. You know both sides just like I do. So, lay it out for us. Why now the statement that the pharma also could be tariffed?
Well, I think that, I don't know whether we have projected at a very, very important chart, which is namely United States believes United States is a very good ally for it to export or import, United States to export more stuff into India to offset the trade deficit. I think we covered gas. If you take a look at the chart, the amount of oil or the petrol that is being imported from Russia has skyrocketed post the Russia-Ukraine war. So he's saying, you got plenty of dough. Why not you direct the dough to us? I have exempted the services. I've exempted the services coming out of India from any kind of tariffs, and which benefits your country. There's a $55 billion to $60 billion FDI flowing into India from United States. He's asking, what is it that I'm getting in return? So for the US people to benefit by virtue of this trade. Clearly, defense is one area. They have already tied up few things, but I think they want a couple of more markets to open for US to access and bring the tariffs down. I believe that Modi will yield, and there would be a viable equilibrium between the two countries to continue to sustain and do the trade strategy.
So I want to make sure that I heard you right, Sridharji. So what you're saying is services from India are not being tariffed right now, meaning like software exports?
No.
Sir, why don't I see Infi board dancing on the streets, sir? They should be dancing up and down on the streets.
Or they should all be dancing up and down the streets, because the services sector is right now exempted.
Very, very interesting, sir. Let's take a couple of.
Well, they've been exempted for quite a few years, Sriji. The whole industry kind of jumped up. The two important things that I want to cover before we take the Q&A.
Yeah.
So what is the macro strategy that Trump is looking at? Okay, what is the macro strategy? Everybody looks at it from the eyes or from the lens of tariffs. Now he's looking at three things. Okay, he is looking at three important things. One is access to markets so US can export more. But people have been foolhardy to think he wants, what you call low labor cost producing items such as your Nike shoes or textiles, clothes. No, he doesn't want any of them to move back into the United States. He is saying, I have things that you need, and why not you take it from me? Number one. And number two, why not you give me access to markets in certain specific areas? Right? So that is number two. Okay. So therefore, from access to markets and bringing about parity between trade imbalances while they are dispensing the same money with other countries is the bone of contention between Trump administration and countries which are running huge trade surpluses with United States. Number one point. Number two point, which is equally important, is there is a strategic play here from United States. We, United States, he says, have put zillions of dollars FDI, foreign direct investment, into many of your countries. What is it that you are doing? This is looking at people like Saudi Arabia, Taiwan, and some of the other nations which are have a burgeoning balance sheet.
Yeah.
China. Well, China he excludes because there's a bigger negotiation with China. We'll probably cover in another session. There's a much wider discussion around China. That's a separate session by itself, what he is doing with China related to the other nations. So number 2 point is, which is, where's the investments coming from your country into United States to build industries here? For example, Japan is steel. Okay, that's a very, very high, highly capital intensive, and steel is required. And we have steel factories. It's not for the purpose of export. It's for the purpose of consumption and reducing the imports. So I think that's one of the areas. The other area is semiconductors. Semiconductor is asking Taiwan, you want to go and build factories in China? You want to go build factories in other parts of the world? You please come. A lot of the semiconductor fab engineering stuff was, once upon a time, you're from the industry, how much of fabs we had in United States? Most of them were migrated to Taiwan. They were the biggest beneficiary. So what's the capital that you're putting in a very important industry, which is of significance to us? So I think that's the second kind of within the investments to come in. And with, as far as Saudis are concerned, you have a huge kind of, trade surplus. We are one of the biggest, importers from you. So what is the capital investment that you are going to give to build and capabilities and industries within United States? You have to look back at the last kind of 8 to 12 years, almost negligible investments have come in, and most of the investments have occurred through markets or through the government intervention. So he wants at least somewhere between 200, 300, 400 billion dollars annual investments to come into United States. So it's not a burden on the balance sheet, but at the same time, it is creating industries within United States. So this is the second big area of contention. And this is, you're going to see investment flows coming into the country as a result of this. Already 4 countries have promised: Japan, Taiwan, Korea, and Saudi Arabia. 4 have promised for the FDI flows to come in to retool the industries here. My final point, which people, tax cuts are coming. Tax cuts which extends to personal, and tax cuts which extends to small businesses, which is the engine of the US economy. Again, go back and look at the 8 years of Obama and 4 years of Biden. What tax relief was provided to the SMEs? Most of the money went for funding lots of things that is other than SME. And also, I think there would be some kind of incentives given, especially for small cap investments and as well as mid cap investments. Both those sectors have lagged in terms of growth, and most of the depression or the market compression that you have seen is in the high tech. And if you go back and study the top 20 companies, we'll do another show, the top 20 companies have taken the brunt of the $12 trillion or $10 trillion the markets have lost. So he needs a funding model for his tax cuts. He needs market access for export impetus. He needs investments into the country. And fourth, if I have to say, he's telling Korea, okay, you want me to be the buffer between the two Koreas? We have been funding it. Now it's time you fund with the surplus that you have, rather than asking us to continue to fund. So he is trying to, at what we call as the macro restructure of the US model, as well as he is saying, I need to retool my economy from a security and safety point of view. So let's discuss these 4 issues. Tariff is the negotiating agenda of President Trump.
Thank you so much, sir. Before we go to questions, I have a couple of announcements. I'm down to just 5 Sengols now, just 5 more. Any of you are interested, please place your order today. We'll be shipping out, and then we'll have to do a reordering again. That's the good news. The second thing is you will meet Sridhar Chityala ji and I in East Coast, in Princeton, the city of Edison, on the 19th of April, where we'll be there to celebrate 30 years of the founding of Infinity Foundation by Rajiv Malhotra ji. This event was planned for a certain amount. It has been oversubscribed by 50%. Sridhar ji, you don't know this part. This is massive. The kind of response that Rajiv Malhotra ji is getting is out of the world. So we are going to have a lot of people there. Both of us will be there. You can meet with us. I am actually hosting one session for about 40 minutes or so about Hindu human rights and Hindus, and that will be on the 19th. So if you happen to be in the area, or if you happen to be visiting Edison area, do look us up. We'll be happy to talk to you. We'll be happy to meet with you. So I just wanted to say this thing. Now let's go to some questions, sir. Harsha Rao wants to know, Sriji, even Musk is advising against high tariffs. Is this not a bit too much, using words like people are kissing his ass? I see no strategy here. Do you?
Well, I think that one should delineate a lot of noise, interpersonal place of personalities within the administration. So there's a lot of jacking and anchoring in terms of the posturing, but it doesn't detract from the strategic agenda that we outlined. Okay, just to give you a perspective, he wants to reduce the debt. when he was the president in the last term, we were involved and we did the rebalancing of the US debt to the extent at that point of time when US economy was around $23 trillion. The expense as a result of interest paid to the debt was between 2 to 3% of GDP, which meant it is close to 400 to 500 billion dollars on the expense side of the balance sheet for funding the debt. Today how much it is? It is around 1 to 1.1 trillion dollars and projected to grow to 1.3 1.4 trillion. That is a significant overhead on the balance sheet of the US government. It's dead money, which doesn't benefit anybody. So really the focus is around that aspect of it, which is why this broad strategic agenda is played out. Now, notwithstanding what Trump says, what a Peter Navarro says, what Lutnick says, it doesn't matter. The strategic agenda remains very clear as to how to address all these three issues that we kind of outlined. You may not hear it along these lines, but we have tried to kind of structure it so you understand that there is a broader play here.
Thank you, sir. Next question from Govinda Guru. Will US make it 400% and how will China react to the 400% tariffs?
Hypothetical, they won't go there. They will negotiate.
Yeah. And last question from C.A. Viswanathan. Yuan devaluation, is it the start of global currency war?
Well, I think there's no global currency war. Renminbi has been manipulated like many countries have manipulated the currencies. You remember what Janet Yellen did in her kind of, she listed the countries and she levied some kind of taxes. And then the whole thing disappeared because of political noise. And she just became silent, almost silent in the last 2 years of Biden's presidency. Now, the question, therefore, is that renminbi has been rigged and rigged and rigged for years. Okay, that is how they drained money out of all of the world until Modi kind of addressed, China's, the imports from China into India. Since many of you, with Indian kind of context, the amount of imports, everything was being imported, including, little idols to little toys to little stuff was being imported. At a huge kind of a cost to the local producers and local kind of manufacturers. All of that has changed. So renminbi having a global currency war is irrelevant. For example, if you take a look at the G7 countries, yen is not at war with United States. It's market linked. Then you take Germany, you take UK, you can take Italy, you can take Canada. Many of these G7 countries have an understanding which uses market mechanism. Even India, which is coming into the G7 plus, 3 or G7 plus or G7 plus 2, is using its central bank to fund, but allowing the market mechanisms to manage its rates. It's not rigging. But again, Janet Yellen said, you have to operate within a currency band in terms of Indian, exchange rate. But I think India has more or less complied. So you don't see this except in nations such as, I don't want to list beyond China. There's few nations who play that game. So that would be my answer to Mr. Vishwanath's question.
Thank you so much, sir. And with that, we bring to a close today's program. We'll be coming in and doing this surprise stuff because markets are moving very fast. But the overall ideology is to try and bring about parity. I get something, I get to sell you something, you get to sell me something, and we need to be at the same level, not more or less. That seems to be the goal of United States. Thank you so much, Sridharji. Viewers will be back again very soon. Like I said, on 19th April, we will be in Edison. We'll see you soon. Namaskar.
Namaskar. Thank you so much. Have a wonderful day.